Okay guys, let's get this show on the road. Final day of the week, most important data of the week coming up. It's been quite an interesting week actually. This is the 1 hour chart looking at top left here is the okay, actually before I begin I should say, right, we've rolled over, so we're now trading the March 2010 contract. The deck, the December 2009 contract, doesn't actually expire till next Friday, but you know, volumes do shift across onto the March 2010 contract now, so there's more volume trading on that contract. The liquidity's better, so that's why we roll over a week before expiry. So this chart you're looking at here is the March 2010, so there will be slight differences. So the obvious one being the high of the year is 11.17 for this contract, so the contract high of the year is 11.17. However, 11.19, which was the December contract high, that's still a level of resistance. Okay, if we got up there, that's the overall high of the year. 11.17 is the contract high. Okay, slightly confusing, but you know, we've got to go through this process once every 3 months if you want to trade futures contracts. It's all part and parcel of it. So that's the high of the year for the March 2010 contract. Now this week, we're actually this morning we've actually we've moved higher, and we're actually back to flat on the week. Okay, so we opened the week opened around about, I think 11.0275 was the opening price on Monday, and so we're back, and you know, we've actually sneaked just above there, so we're back looking to post a second positive week today. And we've got some very important data which with a bit of luck can drive the momentum to the upside, and you know, who knows, we're certainly you know, the high of the year is definitely in range today. It's definitely a target. If the data's good, we can get up there. It's not too far away. So it's been a good bounce off the lows that were set earlier in the week. We got down to, so for the March contract, March 2010 contract, we got down to 10.80.50. Okay, and I've got this Fibonacci series here, Fibonacci retracement series, looking at that move from the high of the year down to that low. Okay, and we're just kind of flirting with the 61.8% level as I speak this morning. So yeah, I mean, obviously we've had a positive market overnight. Let me just zoom in onto the 15 to talk about this actually. So here you can see yesterday's action, and you can see what's happened this morning. This morning we've moved higher. Around about 8 AM we had some very good data out of China. Their industrial output rose 19.2% year on year. This was higher than the expected 18.2%. So good news out of China, and the Asian session generally across the board was good. The Nikkei in particular stand out. That was up 2.5% on the day. But of course, the Nikkei has been in free fall over the last week. They've had 3 big down days in a row. So just that big up day today is more sort of retracement of some of the big losses they've had. So Nikkei up 2.5%, Hang Seng up 1%, and actually interestingly, the Shanghai composite was slightly negative, even though they posted that much better than expected data. The Shanghai composite was actually slightly down, and this is largely due to the fact the government may be thinking about curbing speculation in the Chinese property market. Okay, so that bit of news added some negative sentiment, which just can't put the brakes on the upside for the Shanghai composite itself. Just looking at this chart, guys, what an amazing trend line we've got on our hands. Really starting from yesterday morning, it was confirmed again overnight, and then this morning we've moved down following the push on to the highs so far of the day at 11.05. We've come off slightly and found great support right on this trend line. So this is a very good trend line. Get it on your charts, guys. It certainly has shaped, you know, obviously gives you a good pictorial reference of the trend since the middle of the week, where we've rebounded from that the sell-off. You know, the sell-off earlier in the week, more sentiment driven really, with concerns over Dubai resurfacing, concerns about the Greek situation, Moody's downgrading Spain, etc. So we've had a few negative sentiment stories that added to the downside for stocks, the downside that had been triggered by a strengthening US dollar after the much better than expected non-farm payrolls. So we're back to positive on the week, just about. We're quite bullish today. We've got some very important economic data. First up, and probably most importantly, retail sales at 130, and we're looking for an increase of 0.9%. The range for this is 0.5% to 1.2%. This has been, just looking back at the numbers for the whole year, this retail sales has been quite erratic. It hasn't really strung together many positive months. It's been up and down, up and down, up and down. Last month it was up 1.4%. If we can get a positive number today, and we're forecasted plus 0.9%, that'll be the first 2 months gains, back-to-back gains for retail sales since, just looking back here, actually that would be the first 2-month consecutive gain. Actually no, I'm not right. May and June, okay? May up 0.5%, June up 0.6%. So we haven't had 2 months back-to-back increasing retail sales since the summer, so we'll be looking for that. That'll be a positive note. Basically, the retail sales for the year has been very volatile, mainly due to the fact the auto sales have been all over the place. Obviously, the cash for clunkers scheme has spiked the auto sales over the summer. The October retail sales was up 1.4% overall. And this was mainly due to the fact that there was a 7.4% increase or rebound in auto sales after in September auto sales had dropped off 14.3%. So the auto sales have been all over the place, and this has really been the main driving factor for the overall headline. If you strip out the auto sales, we've actually had a 0.2% rise in September and a 0.4% rise in October. Okay, so the less autos, and we're expecting a plus 0.5% today for the retail sales less autos. So the less autos figure has been a lot more stable, and that has been positive both in September and October, and we're looking for a third consecutive increase for retail sales less autos. So this is an important figure. There's been a lot of talk about the retail sector. Of course, Black Friday, the Friday after Thanksgiving, there was a lot of talk about the retail sector, as there always is each year, but speculation really as to whether or not the consumer is confident enough to get back out on the high street and start spending. And because the consumer is so important, because the US economy is so reliant on the US consumer, retail sales figures are hugely significant. So that's an important data release, guys. That's at 1:30. Also at 1:30 we've got the import price index. That's largely speaking for us insignificant today, okay, given the importance of some of the other data. But import prices at 1:30 as well. Then moving on, our second big data release of the day is at 2:55, and this is the University of Michigan consumer confidence. Again, so it's all about the consumer, and it's about retail today. So retail sales at 1:30, consumer confidence at 2:55, and we're looking for the forecast is 68.2 for this. Last month it was 67.4, so we're looking for a slight increase on November's figure. Actually, the November figure of 67.4 was a drop from the October figure of 70.6. The monthly drop